So there's liability and collision and comprehensive and underinsured. And what do these terms even mean? The different types of automobile coverage can be confusing, but we are going to go through each one and explain them for you in today's episode. I'm Joshua Roberts, attorney at law, and you are watching Lawyer Up. In today's podcast, we're going to look at automobile insurance coverage. Now, it's not a sexy topic, but it is an important topic to understand the different types of coverage that is available, from liability to collision, comprehensive. There's personal injury protection you can get, underinsured, uninsured, all these different types of coverages. It's important to understand what each one covers, and just as important to understand what each one does not. So we're going to look at those types of issues in today's episode. If you enjoy the episode, or more importantly, if you learn something from the episode, hit that like button for me. If you have a question or you have something to say, put it in the comment section below. If you'd like to learn more about legal topics and current events, then subscribe to the channel. And as always, I love it when you share me on social media. So when we turn our attention to automobile insurance coverage, there are two broad categories of coverage: property damage and personal injury. And if you just think about a car accident, two cars running into each other, the two things that can be damaged are the cars themselves, the property, and the individuals inside the cars, the people, personal injury. So that is pretty basic. If you think about auto insurance, it's going to either cover property or it's going to cover the people in the property or the cars. Now, we turn our attention to the specific types of coverages that are available. The big daddy of them all is liability coverage, right? And liability coverage protects other drivers from your liability. So your liability insurance that you pay for pays the other driver's property damage and the other driver's personal injuries if you cause the accident. Likewise, the other driver's liability insurance would pay you for property damage or you for personal injury if they are at fault for the accident. Liability insurance is required by law in almost every state. So it is a crime if you get caught driving without liability insurance. You get a ticket and you have to pay a fine. Most states generally enforce this law by requiring you to show proof when you license your vehicle or you get your driver's license. You have to show proof that you have insurance, right? They also enforce it when you get pulled over for speeding or running a stop sign or whatever it is. They'll ask you, hey, show me proof of insurance. And if you don't have proof of insurance, you can get a ticket. Ultimately, your driver's license can be suspended or revoked if you're found guilty of driving without liability insurance. So liability insurance is the basic fundamental insurance that you have to have on your automobile to be driving around. Now, one of the insider tips that most attorneys know, but a lot of people out in the community don't understand, is that your liability insurance that you pay for includes a defense lawyer if you get sued. So let me repeat that. If you get sued for causing an accident, your liability insurance includes a defense lawyer for you. So you don't have to hire your own attorney. If you get sued for causing an accident, that's part of the insurance company's duty to defend you. They have that duty. And the defense doesn't cost you anything, at least in theory. you won't have to pay that lawyer to represent you. Now, you pay insurance premiums month after month, or whether you do it yearly or every 6 months. So in all of the years where you've paid for insurance and you haven't needed a lawyer, well, that all kind of comes to fruition when you do need a lawyer, because the insurance company will pay that lawyer's fees to defend you. Now, that seems odd. Free lawyer, that can't be. Lawyers ain't free. But remember that the insurance company is the one writing the check, right? And insurance companies would rather hire their own attorneys than have you go out and hire some chump that does a poor job of representing you. The other driver winds up with a great big judgment, and then they have to pay it. So they would rather just say, hey, we're going to handle the defense of your claim with our lawyers. So that's the good news. Liability insurance comes with a defense lawyer if you need one. So what's the problem? Well, the problem is liability insurance doesn't fix your vehicle if you caused the accident. Is there a solution to that? Well, of course there is. It's called collision coverage. So collision coverage is the second major area of coverage. This is coverage to repair your vehicle if you were involved in an accident, and that's regardless of who is at fault. So let's take an example. If the other party's at fault, obviously, ideally, their liability policy will pay to repair your vehicle. However, in a lot of accidents that I've been involved with as an attorney over the years, it's not always black and white. And insurance companies like to squabble. They like to say, well, your insured is a third at fault or half at fault. And they have this back and forth between the insurance companies. But if you have collision coverage, you can simply ask your insurance company to repair your vehicle, and then they can battle it out for reimbursement or whatever they want to do down the road. Your vehicle gets fixed. So with collision coverage, you're going to get your vehicle repaired. Now, unless the cost of repairing your vehicle exceeds its fair market value. And that's when they're considered totaled. So you may have heard that word totaled. It simply means that it would cost more to fix your car than it's even worth. So if your car gets smashed to bits and it would cost, say we'd have to buy $20,000 worth of parts to put it back together. And then even so, it'd only be worth $5,000. So in that instance, your car is totaled. So the insurance company will pay the cost of repair up to the fair market value of the vehicle. And then that's the total amount that they'll pay. The car is totaled. Now, one common misconception that people have is that the insurance company needs to pay off the loan that's on the car or against the car. And that's not the case. The insurance company really doesn't even consider the loan on the car. So you have a $5,000 car, you could owe $8,000 on it. It doesn't matter. Or you could owe nothing on it. You could have it paid off. So the insurance company is going to pay a maximum of $5,000 for a $5,000 car. Now that all goes to you if you have it paid for. But if you have a loan against it that's higher than that, then you're upside down and you still owe that money. The insurance company doesn't have to pay the loan value or the loan against your car. And a lot of people mistake that when they have a car that's totaled or they're in that situation. Now, the problem with this coverage is that it only covers your vehicle if you're in a collision. So what happens if your vehicle is damaged in some other way, like a hailstorm? Well, there's a solution to that. It is comprehensive coverage. This is coverage to repair your property damage to your vehicle, regardless of who is at fault, resulting from something other than an automobile collision. So an example, I said hailstorm, or a tree limb falls off and hits your vehicle, or the basketball goal topples over and smashes the sunroof of your car. The classic example in my life was I had Greyson Roberts. Many of you know who he is. He was a little bitty tyke. He was sitting in the back seat. We get home and he lets himself out of his car seat and he decides he's going to exit the vehicle through the front door. So I'm getting out as the driver, and he comes stomping up through there, hops out the front door, and we go inside. Well, little did I know he had stomped a cup of coffee that I had sitting in my car in a styrofoam cup. So he stomps it, the coffee drips down into the gearbox of my car, and I didn't realize till the next morning. I go out there and I look, and there's sticky stuff everywhere. There's this broken cup. I start my car and I try to put it into gear, and it won't shift because it had fried the brains of the gear shifter, which apparently there's a bunch of computer stuff in there. I don't know, but it was really expensive to fix it, and I was glad that I had this comprehensive coverage with my insurance to cover it, because otherwise I would have had to sold Greyson for scientific experiments to get the money to pay for that. But because I had adequate insurance, I didn't have to sell him. But I digress a little bit. So let's summarize where we're at here. We have liability protection, plus if you add collision protection, plus if you add comprehensive insurance coverage. A lot of people call that full coverage. Now, the law only requires liability insurance. However, your lender, if you borrow money to purchase a vehicle, they're going to require full coverage because, they gave you money to purchase the vehicle, right? They want to make sure that vehicle stays in good condition. They either want to get paid by you on the payments of the loan, or they want to make sure that if they have to repo the vehicle, it's in good condition so they can get the vehicle back, or if it gets damaged, insurance money. So lenders will require this full coverage to make sure that your vehicle is going to get repaired regardless of whose fault it is. Now, the problem with this concept of full coverage is that while it pays for your vehicle, your property damage, it pays for other people's property damage, and it pays for other people's personal injuries, it doesn't pay for your personal injuries. So what happens if you're injured in an accident? Well, the solution to that is what's called personal injury protection coverage. And this pays for your medical and related expenses resulting from an auto accident, regardless of who's at fault. Sometimes people call this medical payment protection, MedPay, but that's actually different. The PIP, or the personal injury protection, is different than MedPay protection. Now, they both cover medical expenses, but the PIP coverage is usually more robust, and it often has some coverage for lost wages as well, which you generally don't get under a MedPay coverage, because it's just for medical payments, like it says. So those are the distinctions between those two. And some states actually require insurance companies to provide PIP coverage unless the insured specifically declines it. So you'll see that in some states where it's actually pushed for by the legislative statutes of the state. So to summarize again, we have liability, plus collision, plus comprehensive, plus your personal injury protection or your MedPay. And that's what I call true full coverage. That is covering you about as good. Notice I said about as good as you can be covered. But there is a problem or an additional scenario to consider. And that is, what if another driver crashes into you and they don't have insurance, or they have insufficient insurance? It's a significant accident and they don't have enough insurance coverage to cover the medical bills. So let's look at an example. Now, in my state, Missouri, the minimum insurance coverage that you're supposed to have is $25,000 for property damage and $25,000 for personal injury. I was watching the news just the other night, Lester Holt on NBC, he said the average new car price was $40,000. And that's average for a new car. And I can tell you from representing people that emergency room visits get in excess of $25,000 in a hurry, even with minor injuries. So it is very possible to have a situation where your car is worth more than $25,000, more than the other driver's coverage, if they have coverage, or injuries in excess of the mandatory minimums of a state. So it's important to note at this point that insurance companies only have to pay up to the policy limits of what the customer has purchased. So if you have medical bills of $100,000, but the person who hits you only has purchased liability coverage up to $25,000, that's all the insurance company is on the hook for. So you potentially have a problem. What is the solution? Well, it's called uninsured insurance coverage, which provides for your medical bills and your property damage if the other driver does not have any insurance at all. Or underinsured insurance coverage, which provides for your medical bills and your property damage if the other driver does not have sufficient insurance to cover all of the damage or the other bills. And I can tell you, as an attorney, I highly recommend that you carry the uninsured and underinsured coverage. It just costs a few dollars a month, but it has been invaluable in resolving personal injury cases where there are bad injuries, but the driver had the state's mandatory minimum and it was just insufficient to compensate my client for the injuries and the property damage that was sustained. So wrapping all this stuff up, we've talked about the major types of automobile insurance coverages that are available. Now, of course, you can get, towing, roadside service. Choke there. Sorry about that. You can get loss of use or rental car. If you need a rental car coverage, you can get that. Glass breakage. There's all these add-ons that you can add if you want. But ultimately, it's a good idea to have the major types of insurance that we talked about, especially if you've got a newer car and if you can afford it, right? This stuff is expensive, especially when my next recommendation is that I encourage people to have more than just the mandatory minimum of the state, have more coverage than the minimum of $25,000, which is what it is in a lot of states. Now, of course, if you carry more insurance, it's going to cost you more and the premiums are going to go up. Sometimes you can offset the increase in premiums by increasing the deductible that you have to pay. And the deductible is when you have to pay part of whatever the payout of the insurance company is ultimately going to be to trigger that policy. So that is a way sometimes that you can offset the increase in premiums for having higher policy limits. Obviously, if you've got questions about the specifics of insurance policies and their costs, you should contact an insurance agent in your area. So that's the explanation of the various types of automobile insurance coverage that is available in the United States. I hope you have enjoyed this episode. I hope it's been informative for you and you learned something. A lot of people don't understand the different types of coverage. Heck, a lot of lawyers don't understand the different types of automobile coverages and how they interact with each other. If you got something to say, comment below. If you got a question, comment below. I try to answer questions. It may take me a while to get to it, but I'll try to get back to you. Hit that like button, hit that subscribe button. And as always, I love it when you share me on social media. Again, my name is Joshua Roberts, attorney at law, and you've been watching Lawyer Up.
Send lawyers, guns, and money.